Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Despina Xanthopoulou, Director of Business Development and Sustainability with Lynx Asset Management, to discuss derivatives exchanges and sustainable development. Despina, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. Thanks for having me.
How can derivative exchanges promote sustainable development?
Well, as a fact, exchanges in the derivative space are already promoting sustainable development. Your exchange, Nasdaq, for example, was a very early mover in the equity index space, for example, launching an ESG equity index, being the first exchange to do so a few years ago, back in 2018. And other exchanges have followed your lead since then. So today we have a number of such ESG screened equity indices in the market. We have also seen other efforts by exchanges in other asset classes, like commodities, for example, where they have embedded ESG criteria in contract specifications.
What are some of the approaches derivative exchanges are taking right now?
Right now, well, the exchanges, of course, they vary depending on what asset class we're looking at. If we start with the most straightforward asset class, which is equities, a sector that we, by the way, Lynx Asset Management only trades through equity index futures and not single stocks. But as mentioned, similar to your contract that is now ESG screened, the OMX 30 ESG index, other exchanges have launched similar indices, and today Lynx is actually monitoring, I think, more than 30 ESG screened equity indices, which are, constructed following different approaches. It could be like excluding certain companies in certain sectors, like tobacco or oil. It could be best-in-class indices that only include companies that have the best or the highest ESG scores, etc. So what's happening in the equity index space is one big area. We also have a lot of developments in commodity derivatives, as mentioned earlier, something that we welcome as a firm, since we trade commodities, everything, from energies to metals and agriculture. And there they have, in fact, embedded like responsible sourcing requirements for, say, metals producer or precious metals producer. So moving towards more ESG integration in existing contracts, so to say. And then also we have seen a number of new ESG classified products also entering the market, like water futures or weather futures or carbon emissions trading, etc.
What more can be done to support sustainable development?
Well, we're happy that things have accelerated a little bit during the last 2 to 3 years, I would say. Some other developments, what we have seen in general is that the emphasis, and it's understandable, has been on companies, right? So if you are an owner of stocks, how do you engage with companies in order to, enable the transition to a greener world, so to say. But then you have funds like our products that don't invest in single stocks. So we are not the legal owners of any underlying stocks. We cannot vote, for example. So we would like to see, both our clients, when they ask us questions on what we do in this area, but also, regulators, when they ask us to start measuring carbon footprints and other things, also give us some guidance on how to apply ESG when you only trade derivatives. Like we, apart from equity indices, we also trade FX, for example, foreign exchange futures and FX forwards. We trade fixed income futures. How are we to classify those from an ESG perspective? So we would like to see more development in that area as well, other asset classes than equities.
And finally, Despina, can you identify any upcoming regulation?
Oh, can I? That is something that we spend a lot of time on right now, and we have done so for a while. I'm sure you are aware that the EU is fighting climate change. We have very ambitious goals here in Europe to be a climate neutral continent by 2050, and we are to reduce greenhouse gas emissions by 55% in 9 years, or actually it's less than 9 years, in 2030. So now we have the EU taxonomy, a very broad regulation coming up that is basically a classification system to define what activities are sustainable. And the ultimate goal being, of course, that you want to direct more investments towards green investments, so to say. So we understand the ultimate goal. As of today, you know, there's still not clear guidance on how all asset classes will be treated, or you know, what applies to hedge funds, for example, because we are not just long in everything, we have short positions as well. But we do understand that from day one, not many investments will be taxonomy aligned. And there's also an understanding among our clients, for example, that something that is not 100% taxonomy compliant doesn't need to be bad. So it's not, you know, either you're compliant or you are brown, as it is called. Yeah, but we have actually, in fact, we have seen the US that used to lag a little bit, the European regulators, they have now been catching up. I mean, end of last year, we started seeing a lot of developments in the US. And there are talks about the EU, well, the EU has its own framework, but the US having its own sustainable finance regulation in some time. So, yeah.
All right, looks like there's a lot on the horizon. Thanks so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. All right.